Hello and welcome to the market update for Tuesday, January the 25th. Again, as a reminder here, as the slide shows you here that if you have questions during the week, make sure you send those to me at jerry@traderspro.com. Let's get started with the update. Now, on Thursday, if you remember, if you attended on Thursday, well, we've been talking about. I was pointing out the key last market update. I was pointing out the key areas to look at. We were really focused on that January 10th reversal day. We'll take a look at that here in just a second. Again, that was kind of the first warning sign that the market could be dropping. But if you were here on Thursday, the market was trying to rally, and then it started to fade. And as it moved below the lows of Wednesday, you heard me say, "Look out! We're getting ready to crash here. We're getting ready to drop here." And I got out of everything in the portfolio, went all the way to cash. And of course, you saw. And then I told you also. I said, if we do drop on Friday, which we did, I said typically markets don't bottom on a Friday. There should be some follow through selling on Monday, and that's what we saw. And then we had that big reversal day yesterday. And that leads us to now. We've got the big bullish reversal day yesterday. What does that mean? Does it mean we're going to rally up from here? Well, that's what we're going to take a look at today. But before we look at the charts, we want to kind of get an idea of the conditions we're in, because again, we can read the price action from the candlesticks. When you see me do it all the time, those are very short term. Those are telling you that there's a strong probability the market could go up the next day or down the next day, or they can give you very short-term signals, but they're not going to give you longer-term signals. But if you apply the candlesticks with the other things that you're looking at, you can get a better idea of whether a rally could be much larger, or if there's further we could drop. Obviously, we can't know exactly what's going to happen, but I will kind of outline what I'd be looking for if I'm expecting this market to go higher from here, break to new all-time highs again. What would be a warning that we might have further downside? We're going to talk about that in today's class so we can be prepared. Again, the key is not, I always talk about this, is we're not trying to predict, we're trying to forecast. And with forecasts, you have to have adjustments. So what I always try to do when I look at charts and when I'm looking at trades is I'm not just looking at, okay, find a stock that should go up. Okay, that's part of the process. What are some bullish patterns that you can find that would indicate a stock is more likely to go up? But after you've done that, and I think this is where people make the mistake, is they find a stock they believe is going to go up, and of course they're going to get in the trade. And they believe, and the reason why they're getting in the trade is because they believe it's going to go up. Then when it doesn't, they wonder what was wrong with their original analysis, and why is it always happening to them? And the problem is that things change all the time. And as trend traders, again, we're not trying to necessarily predict where the market's going to go or where a stock's going to go. We're trying to just follow along with what the big institutional investors are doing. And if suddenly they decide that they're not buying anymore and they're going to be selling, then that's something I want to be able to recognize so that I can get out of a position I might be in, or lighten up on positions I might be in. I want to be constantly just making these adjustments. And so a lot of what I'm doing in these classes, and it's very repetitive, but the point, what I'm trying to do is teach you those little clues, that little analysis using the software. How can you recognize these key areas? What would be a key area? There's a clear key area that would indicate that we're going to have a lot further to drop. And I'll talk about that today. And so I want you to learn how to recognize some of those things so that you can do this on your own. But first of all, with the direction alerts, we're coming off of a very oversold condition. You can see that momentum is all the way to the left side here with that drop yesterday. Very oversold. what that means is that we're in an area where it's much more likely that we would start to see a rally than a further drop. Now, it doesn't mean we couldn't still drop further. You can always go higher when you're in the bearish extreme reversal risk up here. You can always go lower, but from a probability standpoint, you're in an area where there's a much stronger probability that you'd be going up at some point or soon, rather than going down much further. So that's important to note there on momentum. Now, that's not exactly what we're seeing on breadth. Breadth is kind of in the middle, so it's not quite the exact middle, but it's showing that it could still drop further. It could still get more extreme. So it's possible from the breadth indicator here that you could have further downside. But it doesn't have to always, markets at bottom don't always have to get all the way to this extreme range here. So it's also possible we could rally up from here and it could start moving in that direction. One thing that still concerns me that I keep pointing out is that sentiment, despite the big sell-off we had, sentiment is still very high, meaning that the trading crowd is still too complacent. They're still too optimistic. And this gets into an area where there's not exactly a formula that you can. I mean, this is a calculation you can use to kind of gauge market sentiment. But I also point out some of the things that typically you'll see at a market bottom. A lot of times you tune into CNBC or other financial websites or things like that because you're looking to see what other people are talking, what other people's opinions are. Do they think this is the bottom? Do they think this is the top? Do they think you should be buying? And if so, what should you be buying? And you're getting all these opinions all day long on CNBC. By the way, if that's how you're getting your stock picks, you're going to get killed. These people that they interview all day long on CNBC, these people are paying CNBC to come on the show, and they're trying to push their funds, what they're managing, or they're trying to show their clients that they already have that they are true professionals because they're appearing on CNBC. That it's giving them credibility. And I'm telling you right now that the majority of these people, so in other words, the majority of these people that are coming on CNBC are not there to necessarily help you make money. They're there to help themselves make money. And if they can help you make money as a byproduct, so be it, but that's not their main objective. So hopefully as you're, viewing, whether it's CNBC or other websites, whether you're going there for ideas or what have you, don't base your entire decision on what you're hearing from them. Really take the time to learn how to read a chart and recognize some of these clues that you can make better decisions yourself. Again, that's a little side rant there, but I just can't believe with some of these people that come on how wrong they are sometimes with their analysis, or their analysis isn't necessarily matched up. They might be a very, very long-term trader. Well, if I'm a very long-term trader and the market's just dropped 10%, 15% or something like that, of course it's a good time to start buying because there's a very good chance it will eventually go back up. But if you're a shorter-term trader and we might not be at the bottom yet, or how do you recognize when you're near the top? I mean, how do you avoid that big drop that we saw over the last couple of days? There were clues there. How do you avoid that? Well, a 5-year trader isn't going to worry about those little things, and so that's where it can be dangerous if you're listening to the wrong time frame. Someone that's talking from a different time frame. Anyway, but this has bothered me that this has remained so high. What that tells me is that although there was some fear that entered in on Friday and Monday, the VIX did spike up. I'll show you that chart here in just a second, but it's still, the levels are still pretty low, relatively speaking. And I would have liked to seen the sentiment. Very rarely do you see sentiment get all the way in this range over here. There's only a few times it's ever done that. So that's one thing to recognize is you're not going to be on this side of the trending indicator very often. We saw it happen at the COVID bottom when the market just collapsed when COVID first came out. It got over here in the extreme range. But I would have at least liked to see it start to move into that trending area. And I would assume that if we still have further to drop, if we get a bounce right here, which it could be possible, we just get a bounce for a few days and then we go lower, we would see sentiment, we'd really start to see the market start freaking out, and we'd see sentiment move into that trending area there. And that would really tell me, well, that'd be a real obvious signal that we're very close to a bottom if that were to take place. And so that's something that we can kind of keep an eye on. So we're in a little bit of a gray area here as far as what we've seen so far. But again, that's not the only thing we're going to look at. If you look at the buy-sell ratios, we are very wide right here with the sells outpacing the buys. Typically, when you get this wide, you start to move back towards the mean. You start to move back closer together. This could indicate a short-term bounce where we rally up for a few days. If we rallied up for a few days, especially if it was sharp, you can see these two lines come closer together. If they come closer together like that, then it's kind of neutral at that point, meaning that you're not in any sort of extreme. When the red is above the green, that's a bearish extreme. You've usually dropped a little bit too far, too fast. When you have the green up here and the red down here, that's a wide range right there. That's telling you that you probably have rallied a little bit too strongly, and you could see maybe a little bit of a pullback from those extreme levels. Again, what this is looking at is it's looking at buys versus sells. Are stocks that have a buy signal versus stocks that have a sell signal. Okay. The sentiment indicator here is a different sentiment indicator, but it's very oversold. It's below the green line. This would be typically viewed as more of a buy. When it gets down to that level there, the market's usually overshot to the downside. Now, again, that doesn't mean when we look at the charts here, these are all showing a potential bottom. What we're trying to figure out is it just a bottom, a near-term bottom for a bounce? Like I said, maybe we rally for a few days and then we roll over and go drop further. All these so far have been saying there's a pretty strong probability right here that we should see some sort of a bounce from these levels, and that's what I'm seeing so far. And then going back to the direction alerts. Hold on here. They're saying, these ones are saying, at least market breadth and sentiment are saying that there still could be further downside. So again, we still could get a bounce right here, but there's still, these aren't again shutting out that possibility of further downside. Now, one thing that's really getting extreme is if you look at the index tab up here, and sorry, I click on these pretty quickly a lot of times, and sometimes if you're brand new, I forget there's new people that are signing in for the first time and they don't know where I'm clicking. Usually I'll start with the market trend, and that's where I look at those direction alerts. We don't usually go into indexes very often. But this can show extremes, and so sometimes I'll show you what I look at when I go into the indexes tab here. Then I usually will go to the watch list and go through the market, the indexes, the SPY, the DIA, the QQQ, and then I may review the portfolio. But part of the process too is we'll go in and look at individual stocks within these sectors. What are some strong stocks within the sectors? In other words, what can we trade based on this analysis? That's kind of the process I kind of go through there. But under this index tab, again, I go back to a few weeks ago when we were at bullish extremes. We were seeing double-digit ratios here. Look at the ratios now. I mean, look at the Russell 2000 index. There are 879 sells and only 57 buys. The Russell 3000, now the Russell 3000 is basically considered to be every stock that any portfolio manager is going to be getting into. Anything lower than this is probably too small of a company to even get into. You got 1,300 sells versus only 89 buys. So these are really extreme levels, really, really low levels. So what does that tell me? S&P 500, 270 sells versus only 22 buys. What this is telling me is it's telling me that, again, we're very oversold. Could we go lower? It's always possible, but boy, we're due for a little bit of a bounce here. This is getting really extreme, and we should start to see a bounce. Now, what could happen in a bounce, again, it doesn't eliminate further downside, but even if you got a bunch of these stocks, which I believe is the case here, are barely at holds. They're really close to going back to a buy. So you get a little bit of a rally over a couple of days, you're going to see these ratios spike up a little bit and at least alleviate that extreme oversold condition. And then again, like I said, it could have another leg down after that takes place. But as of right now, looking at these, that's pretty extreme. And it's probably not a coincidence that the market tried to sell off again today, but then it's kind of rebounded again. It had a nice bullish reversal again today. I just think that they're these extreme levels. We're not the only ones that are analyzing this. Professional traders are seeing these conditions and how far things are beaten down. And again, they're starting to buy. You get people that are short the market that see these extreme conditions. That's a signal to start covering your short positions. Well, if you're covering your short position, you're buying to close out that position, which is also buying volume that's taking place in the market as well. In fact, that's mostly what we saw with that bullish reversal yesterday, was short covering taking place, reaching an extreme level where the people that were short the market decided it's probably time to start covering those positions and getting out. So this is really showing an extreme oversold condition in the market. Now, if we look at the individual charts, let's take a look at the S&P 500. And let's back out to, first of all, we can see what the reversal. Here's the bullish reversal yesterday. Again, what were the clues leading up to this drop? Again, here was that January 10th bullish reversal right here. Same thing happened that day that. Not as extreme, but that we had it opened down here, it dropped a little bit right here. Again, in hindsight, we could say it was real obvious that we're going to go lower, but it wasn't. It looked like just a normal pullback. You have this more normal pullback. We had a bullish reversal candle here. We rallied to new all-time highs. We pulled back this day, opened right here, traded all the way down here, and then the buyers pushed everything back up, closed it higher for the day. Still lower than the day before, but higher for the day. Big bullish reversal day right there. Went up from there a couple days, then rolled over. I said, keep an eye on this low. If we drop below that low, look out. Well, we ended up dropping below the low right here, but we weren't seeing any high volume. We weren't seeing any panic. The VIX wasn't moving up significantly. And then the next day, this was Wednesday, we dropped lower. And again, we still weren't seeing a lot of fear in the selling yet. And then Thursday, this is where we opened on Thursday. We were trying to rally back up. We got all the way up here. And then when it started to slide during class, we were watching it. By the end of class, we had dropped below that low right there. And I said, that's where I said, look out. This is going to get ugly. Why? Well, because it tried to rally. See, it really tried to rally right here. It had a nice big up day. And then it just faded. It just ran out of steam. And you combine that, look where it rallied up to. It rallied up to this low from that key low right here from that bullish reversal day on the 10th. And you start sliding below yesterday. That was yesterday at the time, Wednesday's low. That's where panic's going to start kicking in. All these people that bought right here thinking it was going to go up, they didn't really panic sell right here. They were still believing it was going to go up. They were still believing it was going to go up that at the first part of this day right here. this is when they realize it's not going to go up. And sure enough, they had the panic kick in. And then you saw on Monday, it gapped all the way down, went way, way down. Dow was down 1,000 points, and then came all the way back and actually closed positive for the day. Pretty remarkable turnaround. There's been very few that extreme in the history of the markets. I think the last one, there's been a couple people that said there's one that happened in March of last year, I guess, maybe they said. The other one was back in like the financial collapse of 2008. There was a reversal day that was kind of like that. But now it's not uncommon when you get some of these bullish reversal days to have it attempt to go lower again the next day. I think that's what we're seeing today. We opened down from where we closed. Here's where we closed on on Monday. We opened down this morning, and then we traded all the way down here. Then we come all the way back. Now we were up a little bit higher at some point. We'll see if we can get back up to near the close of yesterday. If we do that by the end of today, we'll see how things look. A lot of the movements happened in the last hour of the trading days, so we'll see what happens there. But that low yesterday is going to be significant. If we break below that low, you're going to see massive panic. We are going to see the extreme panic kick in. Now, another, this is what I think I failed to point out a little bit earlier when I was getting to it, was another sign of a bottom is that you're not going to feel like you want to buy. Okay. A lot of times, if you do have CNBC on, when you're at near a bottom, you're going to have people, when people are coming on and they're saying, well, what should I be buying right now? A lot of people will be saying, oh, I would wait. I wouldn't buy in right now. We probably have further to go down. I don't see anything I like right now. There's not any confidence to get into anything. Remember, these people want to tell you what to get into. They really want to tell you so they can, look smart and everything. But when they're afraid to buy or they're afraid to recommend anything, that's usually a sign that you're getting very near a bottom. And especially if it's really, really bad and they still think it go even further, drop even further, a lot of times that's a sign of a bottom when it takes place. When you get a market drop and the first thing everyone's doing on CNBC is recommending, oh, this is a great pullback here. This is a great opportunity. These are the opportunities we look for. This is what you should be getting into. You should buy this. You should buy this. That's a red flag. That's saying we're not done dropping yet. Or maybe we get a little bit of a bounce, but there's probably eventually a lot further to go down. You don't see confident buying at a bottom. And so those are things I start to look for. And now there's a little bit of that trepidation in buying right now with people getting burned on that move down. And again, that could be that this is just a little bit of a bounce right here. That's all we get. Is anyone else having any problem with the audio? Is it breaking up at all or anything like that? I have one person that said they do. If it's just the one person, you might want to try to call back in or log back in again. Sometimes it could be your connection. Usually when there's a bad audio on my end, I get like everybody starts saying there's something wrong. So if there's only one person, it might be on your end. You might need to just log back in. Keep in mind, too, that these are recorded. So if you miss parts of it or what have you, and as long as the audio problem is not on my end, it should the recording should be pretty clear. All right. Yeah, everyone else is saying that the audio is fine. So I'm going to assume it's still okay. And again, I don't want to appear insensitive. I don't want to help you out. It's just, I can't spend, especially since I'm not very good at troubleshooting audio problems. I can't take up all the class time trying to do that, especially since the recording should be fine. And you could review that later if you need to. All right, so that low is going to be important. Now let's zoom out because there's a couple things that we want to pay attention to. Let's go out to a 2-year chart. Anytime you have any sort of reversal, you want to see, is it reversing at a significant area or a key area? Because if it's reversing and you don't see any other reason for it to reverse in that particular area, then then I don't always trust the reversal. Now, in this case, I think we have, if you take a look at a horizontal trend line right through here, you've got a previous high right here, previous high right here, a previous low right there. This low is in the same area. When I look at these support resistance areas, I look at zones. I don't necessarily look at exactness, but there's definitely a reason we could rally off of this low. Now, what I'm concerned about is that typically pullbacks don't happen in one move. You usually don't get a one drop like this and then it takes off. Usually you get a three-step process. You get the initial sell-off, you get an attempted rally or a bounce, and then you get the flush out move when it drops down. This is what creates that ABC pattern you hear me talk about all the time. And the nickname for a wave B rally right here is a sucker's rally. It usually sucks people in. People think this first sell-off is the buying opportunity. Again, remember, you're usually not going to feel like you want to buy at a bottom. And so usually you're confidently jumping back in, thinking that everything's fine, and then it rolls over. And that's what creates the panic selling, is when it dips back below there and it creates that this ends up being the low, and then it starts to rally off of that. Here's a good example here. Here you had initial sell-off, you had a bounce, and then you had another move down right here. And then now that rally didn't last very long, but typically you'll pull back in that three-phase move. And usually it's pretty noticeable. It's usually a little bit more, because you can even make the argument here that this was the ABC or something. You see how it's more sideways right here? That's more of a kind of a consolidation. Any sort of a kind of a sideways move that creates kind of that step within the stair step. So what I'm looking at here is it could be that this was wave A, wave B, wave C. Now wave C usually is about the same length as wave A. So in this case, if that's wave A, wave B, wave C would be twice the length of wave A. So that would be unusual. It's possible though. So what we're trying to figure out is, could this be the end, and then we're rallying to new all-time highs from that? What I'm really going to be focusing on in the next week or two is the possibility that this was just wave A, that maybe we rally up for a few, a week or two or a few days, and that creates wave B, and then we get the big flush out move for wave C. Maybe it brings us down into this area right here. You've got some. Here was kind of that last solid correction right there, so maybe that's where it pulls back to. I don't know. Okay. Now I do know that it really should rally from here, whether that's a wave B or it's going all the way back up, because of all the oversold conditions. That bullish reversal candle we saw yesterday, we should see somewhat of a move up from there. But like I said, if it breaks below that yesterday's low, look out. We're probably going to move down into this area here. And it probably happened very, very quickly. Within a couple of days, it's probably going to get down there. Hold on just a second here. All right. Now, like I said, typically you don't have just a sharp, usually your ABC, like I said, usually it's pretty noticeable, where it's a pretty noticeable bounce. This is a really quick bounce, if that is the bounce. However, a sharp drop like this that goes right back up isn't out of the ordinary. If you went back to and looked at the, we got to go back a little bit longer than 2 years here. We want to look at the COVID low. See, that COVID low was just a sharp move down, straight down, not really an ABC in that, and then it came right back up. And to be honest with you, when we had that sharp of a drop right there, and then we had this little kind of move up right into this area right here, I was really thinking that it might have another move down, even though this was really extreme down here. Because of typically you don't have one straight drop. I kept kind of waiting for that next move lower. Now, it didn't mean I wasn't trading. I mean, I had positions, but I was really kind of watching for any warning signs that it was going to go back down again. As it kept going higher, and it was getting back as it was retracing much of that drop, I started to get more and more confident that we were going to have a much bigger rally. But that drop is not, this looks pretty similar. And so, if you're looking for reasons for it to just be able to stabilize right here and go right back higher again, it's definitely possible that could happen. It doesn't necessarily have to. Now, by the way, remember we were looking at this area right here that it could maybe pull back to. This was the start of that drop from COVID. It's possible that if we did get a bounce, that it could even get down into that area there before it finds support. I mean, that'd be a really massive sell-off. There would have to be some sort of a real panic trigger for that, and I don't know what that would be. Maybe some just crazy inflation numbers that look like inflation's out of control or something like that. I don't know. But the key, though, is that we've got to really pay attention to yesterday's low. If that gets broken, we're in trouble. Now, what would be some clues that would indicate that we're maybe this isn't just a bounce? And if this is just a bounce, my target would be right in here. You had this big bullish reversal day right here. You had this support area right here. I think we would rally into here, and then you'd see maybe a bearish reversal candle that could indicate that maybe you're starting another move down. If you can get above that area, and if we get back above that January 10th low, I think you'd see more confident buying coming in. And now, also one thing I look at is that when you get a trend reversal, it's usually an area where you get back-to-back impulsive moves in the opposite direction. So when you're going up, you'll get impulsive, corrective, impulsive, corrective. When you reverse, usually from an uptrend into a downtrend, you'll get impulsive up, impulsive down, and then you'll get corrective, impulsive down, corrective. When you reverse from a downtrend into an uptrend, you'll get impulsive down, impulsive up. So one thing I would look at is, do we get a few days right here where we rally up sharply and then maybe pull back and do this, where it's a little bit more choppy, more sideways like that? That would be an indication that we're probably still going higher. If on the other hand, we're really choppy as we're rallying back up, and we rally back up in this area here, and then you get a bearish reversal candle, then then you're worried about that rally back up. Is that just a step setting up for another move down? So how we rally over the next few days is going to be something we want to pay attention to as well. And it's something I'll point out on Thursday if I see it. Does it look like it's impulsive off the bottom here, or does it look like it's more corrective? It's looking more corrective. That'd be a red flag that could indicate that we have further to drop. Yeah, it looks like if you had a little bit of trouble with the presentation freezing up or something like that, just be aware that it's recorded, so you should be able to go back and view it. Just go to the YouTube channel. It usually takes a couple hours for it to upload, but go to the YouTube channel, Traders Pro, go to YouTube, type in Traders Pro, and you should see it posted there. All right, now the other charts are going to be very similar. We're not going to spend a lot of time on those. Dow, this would be the Dow is looking like it's about to go positive. But that low, again, is important. All these charts are kind of reversing in support areas. So NASDAQ is still down quite a bit. Russell 2000. Now, one thing I wanted to show you on the Russell, it could be an indication that we're close to a bottom. See, I don't see any major support until down here on the Russell. So you could say, man, we have a lot further we can drop on the Russell. And that's potentially true. We could, if this market really gets crazy. Here we had a sideways range right through here. Now, whenever you see a sideways range like that, you know, if you're moving up and you have a sideways range and it breaks out, here it broke out. One of the rules of thumb, and it didn't quite do it here, but one of the rules of thumb that you can use is when you break out, the key is you got to wait till it breaks out. When it breaks out, when it finally breaks out of that sideways range, you can usually take the top of the range and to the bottom of the range, and the stock will typically go up at least that same distance. And the key is at least. It very often will go further than that if it's in a nice strong uptrend. But it gives you kind of a target expectation of how far it could go. Now, it didn't quite do it here, and that's why we call it a rule of thumb. If it did it every single time, we'd call it a law, right? It'd be absolute, but when there are times where it doesn't quite go that same distance. There are going to be times like that. In fact, that's what kind of worried me back here, was that we didn't go very far after that breakout. We came right back into the zone. But now that we broke into the downside, you can do the same thing. You can take that distance of the sideways range and project it downward. And that's about where we're at. So there's not a lot of support over here that you can really look at that could indicate that the Russell could find some support right here. But that measurement is something you can maybe use as maybe it finds a little bit of support here and starts to rally back up. The bottom line is one of the reasons why we focus on the Russell 2000 is it tends to be a leading indicator. Now, again, it's not exact, and it's not always timing-wise saying it immediately. But looking back in hindsight, this was warning us as the S&P and the Dow, all the other indexes were breaking out to all-time high. The Russell wasn't. And it was the last one to break out to do all-time high. When it did, it came right back down. And so it was lagging. It was not participating. So what we were seeing here was that the market was going higher, but there was just a handful of stocks that were causing it to go higher. It was rallying mostly on the big cap tech stocks and the large companies. And usually when fund managers are very optimistic and they're very confident the market's going higher, this is what happened when we had the bottom that happened at the COVID lows. What immediately happened is all these fund managers went into these risky stocks. They started to buy all the electric vehicle stocks. They started to buy the SPACs. They started to buy all these really speculative, very risky stocks, because those stocks, if I'm really confident the market's going to go higher and I can buy a stock at $5 and it goes to $25, that's a huge return. Meanwhile, if I buy Caterpillar and it goes from, $300 to $350, that's not a very big percentage return for me, although it's a safer return because Caterpillar is not likely to disappear overnight. But I'm going to make a lot more money in the speculative trades. However, these are also companies that could disappear. I mean, you're looking at, we've got these SPACs have been obliterated since they topped out last year. A lot of them are just going under. They're going bankrupt. Well, I don't want to be, you know, I don't want to go from $5 to $25 and then have this thing go all the way to zero. And then now I've, you know, what good is that big percentage move if I get wiped out and it goes out of business? So the point I'm making here is this can be a gauge of how confident those professionals are that the market is going higher. If we start seeing the Russell 2000 up by a higher percent than the Dow or the S&P, if there's a day where the Russell 2000 is up 2%, but the Dow is up 0.5%, that's a sign that those fund managers are being more aggressive, that they're a lot more bullish on the conditions or in the market, and they're going into those riskier trades because they believe that they'll make a lot more money. Okay. Anyway, let's keep going here. I know I'm taking a lot of time on the update part here, but we'll still get to the other stuff as well. I don't have to go. We can go through this others pretty quickly. This is a bond chart. Now, one thing I do want to pay attention to on the bonds is it's been in a downtrend. Notice impulsive down. Here's corrective, impulsive down, corrective, impulsive down, lower highs, lower lows, acting like a downtrend. However, and I just pointed this out, we just had impulsive down, impulsive up, and we might be getting a little bit more of a sideways move right here. So I'm going to be looking to see if bonds are reversing right here back into an uptrend. And if it can go above this high, this was the last lower high right here, lower high, lower low, even high. If it can go back above there, now you've got a higher high, and it's starting to act like an uptrend. That could end up being a higher low at that point if it rallies up, and it could be showing you those subtle clues that it's maybe reversing back into an uptrend. So it kind of happened back in here. You had lower high, lower low, impulsive down, impulsive up that went to a higher high, pulled back, had a higher low, higher high, sideways correction right there, higher low, started acting like an uptrend. Now, again, this is not perfect. Here it went to a lower low right there and tried to rally, had a lower high. Looked like it was about to go to a lower low and then went right back up again. Again, we're not expecting exactness out of our analysis, but we want to try to recognize. I want to teach you the typical behavior of these charts, this how they typically act, so that we can recognize that. And right now it's potentially in a trend reversal here. That's something we'll keep an eye on. The question, could the Russell be in a smaller impulsive wave 3 down? Possibly, and that's what I was talking about earlier, that there still could be more downside. That could be a wave 3 that we just experienced. We might have, wave 4 or wave 5, or it could be about wave B. It could be wave A down, a wave B bounce, and then wave C coming back down. What they're talking about here is we're talking about Elliott wave counts, Elliott wave analysis. I have a full training videos on Elliott wave analysis. If you want to go through those, go to the YouTube channel and find type in Traders Pro and then Elliott wave, and you should be able to find those. Gold is again, it's been in a sideways trend for the most part. You look at the longer term trend right here. I've really kind of skipped over gold quite a bit because it's not going anywhere from a long term perspective. But in the shorter term, it's been trending up, higher highs, higher lows. So again, the assumption is that it's in an uptrend. I don't know if it's going to reverse and come back down because overall it's been in a sideways move. But obviously this would be a key high right here to keep an eye on. If it can continue to trend up and break above that, that was the last major high it was at. So that would be more reason to expect that it could be maybe breaking out to the upside. But boy, it's been whipsawing so much over the last couple of years. I'd have no confidence in buying it, expecting it to go to go up, to suddenly break out of that sideways range right here. Oil looks strong today. In fact, this is really the only sector I would be buying back into right away, is because it's been so strong and it's really held up. Look how this is, with the big drop in the market, this is how far oil's dropped. It is acting like it wants to go higher. If you're looking for the safest trades to get into, it would be the oil trades right now, I would assume. Now, you could make the argument that if the market could maybe has further dropped because oil hasn't dropped. All these oil stocks haven't corrected very much. Yeah, that's possible. And if this is just a bounce, maybe we see oil go a little bit higher, and then maybe it does have a bigger correction. But if you're looking for just trading this bounce, if it is a bounce, this would be the sector that you'd want to be getting into. The dollar, I pointed this out a couple updates ago, where you had the sideways range. This was previous move was up. We should have another move higher. The dollar should continue to go higher. Sometimes when you're in these sideways moves, you'll get a real quick drop and then a recovery like we did here. But it's acting like it still wants to go higher. Now these candles you've got a couple bearish candles right here, but as the longer term, it's not going to go straight higher, so you'll get these little pullbacks, stair steps along the way. That could be what we're seeing here, is maybe we're just going to get a little bit of a pullback in the dollar for another step, but it looks like it's acting like it still wants to go higher, higher highs, higher lows. The VIX, again, this is one thing that concerned. We finally got a spike up in the VIX yesterday that was significant. We were moving up, we were selling off, and we were moving up, but it wasn't any fear yet. But even then, we're not even at the levels we were at back in December, back in September. There could be a lot more fear that could come into the market, and that's what concerns me as we pull back, but we're still not seeing. Remember, the VIX is measuring the level of freaking out by the big institutional traders. That's my simple definition of the VIX. So they're not freaking out yet, and until you kind of see the professionals start freaking out, it's hard to feel like you're at a true bottom yet until that happens. So that's something we'll pay attention to. It doesn't mean we're just going to start shorting everything right here, because I'm not convinced yet that we have another move down, but I'm going to be cautious here on this rally that we're seeing so far, or this reversal. We don't even really have a rally yet. We have a reversal, a bullish reversal that seems to be kind of taking place. This is the chip stocks. Again, they're beaten up here. Another possibility on this is very similar to the S&P chart as well. Again, could this be wave A, wave B, wave C? Could this just be wave A, and then we get a bounce for wave B, and then we get wave C? There's also another possibility that this was wave A, this is wave B, and this is wave C. And if that's the case, the correction is done, and we're going to be heading higher there. We'll see how things behave right into here. Do we get an impulsive up and start stair-stepping up? We'll see how that starts acting. But those are some possibilities there. Transports, this could be wave A, wave B, wave C on the transports. Let's look at a longer term chart right here. I do like the longer term chart of the transports. You've got kind of this bowl-shaped move right here. You've got a correction back down right here. As long as it can hold these lows, start moving up. If it can break out of this, it'd be really bullish if you see transports break out. The transportation index tends to be a leading indicator too. So if the transports break out before the Dow, industrials, that would be a good bullish sign to look for. Again, we're a little ways away from that happening, but that's something I would be paying attention to. Bitcoin had a big reversal day yesterday. We'll see if it has some follow through to that over the next few days. All right, so bottom line, we should get a bounce. A lot of what we analyze could indicate a very strong probability for a bounce. But we're still not positive if this is the bottom or if it's kind of that temporary bottom. So we're going to be a little bit cautious. Now, as far as individual stocks, I'm just gonna stick to oil. Oil's at the top of the list, and there's a lot of these great under the holds right here. There's a lot of them that have been buys for so long that are finally coming back down to hold that we could get into. I like Devon Energy down here, DVN, 98 strength rank. Look at the bullish engulfing pattern yesterday. Nice move higher today. Oh, we can switch this back on the signals here. I think this went back to a buy signal. Yeah, this went back to buy signal. I've been wanting to get into this one. It's been at a, I haven't wanted to chase it though. So I might add this one to the portfolio. I did get back yesterday. I got back into, what is it? It's, Continental CLR. And so I caught this big move today. I just like the bullish reversal. And again, all the oil stocks look good. And this is one that I like as well, CLR. But there's a bunch of these that look the same. This Matador MTDR. This Oasis, OAS Petroleum. And sometimes what I'll do as well is if obviously you say, well, why am I staying away from some of these up here? Well, some of these are not stocks. They're funds. Here's a trust right here and so I sometimes when you have these high strength things, I like to look for companies that I already know, that I've already familiar with. Devon was one. Continental is one that I'm familiar with. I like this Marathon MRO right here. Murphy Oil, that's a good one. I've been waiting to get into Marathon. Again, I didn't want to chase it. This is kind of our pullback here to be able to, and like I said, all these are going back to buy signals today. Now, this is what I was showing you earlier when I was going over the indexes. I said that there's a lot of these that are very close to going right back to buy signals. I think that there's a lot of sectors that are like that. They pull back, they went to hold on the sell-off, and they could go right back to buy very quickly. And so those ratios could start to shift pretty quick. And what I was pointing out then was saying they could alleviate that oversold condition pretty quick. But those are ones that I would probably focus on. I really don't want to go into any other sectors yet because I don't have a lot of confidence in them yet that they're going to rebound. I want to see a little bit more confirmation that we're rallying up from here. But here in the portfolio, you can see I'm mostly in cash. I got back into CLR yesterday, up about almost 12% from getting in yesterday. So that was a good run there. Now, so I'm going to add some, and it's all going to be oil. And again, you might say, well, why do you want to have all your portfolio in one sector? That's too risky, isn't it? It can be, and if oil suddenly collapses, it could hurt us a little bit. But this has been outperforming. It didn't drop very much here, and if we do rally up, this is a sector that's likely to continue to move higher. So I'm not going to have my whole portfolio in oil. I'm going to get into a few oil stocks, but we're still going to be a majority in cash. Okay. Now, the ones I'm going to pick, there's actually three more I'm going to get into. One is just, I talked about this a while back when we were going through a market update. I can't remember when it was, but I said if you just want to trade oil, and not try to find the individual stock, each individual stock, why not just trade the USO? So we can add the USO in, has 100 strength rank right now, and it didn't even go to by the way, look at what it did here. When it did pull back, it pulled right back to that previous high right here. So it broke out, retested the breakout, looks like it's going higher. I've been wanting to get into USO, and so now what I'm going to do is I'm going to use a tight stop on these. I'm going to use yesterday's low, because if we drop below that, I want to be out. And that'd be a great place for a stop too, because it's that low and this previous high right here. That's a pretty strong. If we get back below that level there, then look out. It's possible that this is just wave A, wave B, and you get another move down for wave C. But what was the low on that day? That was 58.81. So I'm going to say about 50. I'll just say 58. Let's just use 58. Stock specific class, 58 stop. Now, because I'm using a tighter stop, it'll tell me I can, I'm going to have very low risk, which means, it might say I could buy 1,000 shares, well, not quite 1,000, but it could say 500 shares, and I'd be pretty close. You remember, my portfolio at risk, I like to see it around 1 to 1.5%. But I'd have $30,000 into the trade. I don't want to have more than 10,000 into the trade there. So I'm going to be, because I already know the risk will be fine down here with a smaller amount. I want to get this down to under 10,000. So we'd be looking at probably not even 200 shares. What about 150? Yeah, that'd be fine. Let's stick to 150. Let's go ahead and purchase that. And then I wanted to get into DVN. I'll use yesterday's low as a stop. So about 40, we'll say 42. Usually I just throw in 100 shares and start from there. And I can kind of massage the numbers there. That'd be 5,000, so not quite 200. What if I did 175? That's about right. Oh, wait, no, portfolio at risk I'd have. So I got to go a little bit lower there. Let's do 150. There we go. All right, let's purchase that. And then I wanted to do Marathon MRO. Use yesterday's low as a stop. It's about 17. We could do about 500 shares. Yeah, I don't know if I want to see what would be. Yeah, I'm going to be about 400 shares. What I was doing there is I'm trying to keep the total amount into the trade at under 10,000. I want my portfolio risk to be usually between 1 to 1.5%. This would tell me the dollar amount if I get stopped out, what I would look to lose, about $750. But because we're all in the same sector here, I didn't want to have the full 10,000. I want to get back down a little bit closer, maybe 7 or 8. So we'll see how that goes. Let's go ahead and purchase that. All right, so we still have majority of cash left. Now, again, there is a risk that if oil starts dropping, you know, we've got all of our trades in oil, but with the market looking like it should rally, I would expect that oil should rally with it. And this is looking like the safest area to get into. I'm not the only one that's got to be seeing this, so I would assume that other professional traders are kind of thinking the same thing, want to get into oil first before getting into other riskier trades. All right, that's it. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.